Welcome to Energy Vista, a podcast on energy issues, personal and professional trajectories. I'm your host, Leslie Palti-Guzman. In each episode of this podcast, we chat with energy experts from all around the world. They tell us about their passion, inspiration, and aspiration. And one of my favorite parts of this podcast is the focus on their personal trajectories. I always learn a lot and I find it very inspiring. So make sure to listen to the end. It's April 26, 2019, and time for a new Energy Vista episode. Today, I'm exchanging with Rachel Ziemba. Rachel is a prolific advisor, analyst, and researcher. She's the founder of Ziemba Insights, a macroeconomic research firm. She also holds numerous affiliations, including Senior Fellow at the Center for New American Security. She's a specialist on global macroeconomic issues, trade, and sovereign wealth management. She's originally from Canada and is based in New York City. Today, we will discuss the role of state-owned investors and the role of sovereign wealth funds in economic diversification in oil and gas producing countries. Hi, Rachel.
Hi, Leslie. Thanks for having me.
Thanks for joining Energy Vista. So ahead of our chat, I was looking at a recent ranking of sovereign wealth funds, and I saw that the world's largest sovereign wealth fund is the Norwegian government pension fund. The third largest is the Abu Dhabi Investment Authority. And the sixth one is the Saudi Arabia Foreign Holding. And all of them manage above $500 billion and derive most of their wealth from oil and gas export revenues. So I guess they have a huge economic and political clout, and this is something we're going to discuss. So to start, maybe you can tell us why is it so important to follow and monitor what oil-rich sovereign funds are doing?
Sure. So I think, Leslie, you pointed to one of the reasons by highlighting the fact that some of the biggest pools of government capital in the world are from oil-rich countries. So one reason that it's important to follow them is it's a large source of global capital that can affect many asset classes. It also can be a significant source of investment in the energy sector as well. And that's something I think we'll come back to. So the asset allocation decisions of these funds, whether to invest in energy majors or independents, that can be a lot of money. It's also important because these are the tools that countries are managing the proceeds from their oil wealth, oil and gas wealth, I should say. And decisions that governments make on the government spending side, whether they save or spend, that can be very important to whether there's money left over to invest in exploration and production, downstream activity, and the like. And it can influence decisions about whether to exploit new areas. And at the heart of it, particularly for populace, sort of for energy producers with large populations, that the decision mark of how they deploy this capital is very important in decisions about whether they can move beyond oil. Many countries in Africa, in the Middle East, are trying to reduce the reliance of on oil and gas. They're trying to have new sources of tax revenues, new sources of jobs. And so sovereign wealth funds, how they're deployed, is a part of that whole policy package.
Yeah. Do they manage to avoid the resource curse for some countries?
I think they're a part of it. I think there are many countries that struggle to avoid the resource curse, or as some analysts have been talking about, even the pre-source curse. The fact that we've seen in a number of emerging developers that not only is there this distortion after oil and gas or another commodity is produced, but the risk is once that resource is found and money starts to come in for investment, it can actually drive out other sectors even before a drop of oil is, or a meaningful, a barrel of oil is extracted from the ground. And that's something that in countries like that are just really starting to tap those resources is a concern. But one of the whole reasons for creating sovereign wealth funds or savings funds was a desire to shelter parts of the non-oil economy to avoid the costs that come from the benefits of energy production. So, and to put some money aside so it's there for a rainy day. And as we know in the energy markets, there can be a lot of rainy, volatile days.
So how, for instance, right now we know that oil prices are very volatile those days. Do that impact their investment profile, and how do they protect themselves, those funds?
Sure. So I think the first thing I would say is that just as oil producing countries are different, so too are sovereign funds. And that has a lot to do with their sponsor governments. So a country like Norway, that's rich and developed, but is actually a pretty small population, they have saved a lot, and they had a developed non-oil economy. And so they invest a lot for the long term. And they invest in very passive, long-term investments. Now, for a country like Saudi Arabia, which has a lot of savings, but actually has a much larger population, you have seen this development of development investment, this focus on projects at home and other areas. So I think one of the important distinctions is whether an energy producing country has the capacity to absorb more investment at home. The whole idea, in part, of saving money is not just to have it available when the oil price collapses to offset, but it's also to say we don't want all that money piling into our local economy, making the exchange rate get stronger and the like. So what I think we've seen is a proliferation of different sorts of funds, and poorer, more populous countries that have more demands about how these things should be allocated. They tend to focus on what I'd call sovereign development funds. So the government money is often allocated in investment locally. So maybe it might be building roads and ports, but it might even be movie theaters or entertainment or support tourism. Now, that in of itself creates other governance issues. Who gets to decide? Because many of the countries we're talking about don't have the same kinds of democratic accountability institutions. And that's something that a lot of both locals might have questions about, but internationally there are questions as well, because whenever governments get involved in investment, there can be questions of, is there a geopolitical impact? What's the underlying goal? Many of these funds, they care about the economic and financial return, but they might also invest more in countries that are their friends. And so that's something where I think we can look at and study broad trends, but it's also important to look at each individual actor.
Yeah. Well, for me, I looked a little bit at Qatar because of the gas wealth.
Sure.
And a lot of the capital that Qatar had deployed in its neighbors in the Gulf had to be redeployed after the blockade. And it was interesting to see also the geopolitical impact of it.
Yeah, it's very, very important. So not only was there money that had to be redeployed after the four neighbors blockaded it, but also the very fact that Qatar had significant savings was a source of resilience for the country. So obviously it's a very wealthy country on a per capita basis. But one of the questions that came up about their sovereign assets was, how liquid were these assets? So they had to deploy some funds from the Qatar Investment Authority to replace some capital that left the country from the banking system, particularly from the neighbors. And so that, I think, argues if one does, as I often do, as someone who looks at country balance sheets, if one looks and says, what's the optimal allocation? One would often say, well, you want to make sure there's enough liquid reserve-like assets. Then you might invest in other things over a longer horizon. But there is a real debate about how much liquidity is necessary, particularly when volatile revenue flows fuel the budget. Now, for a gas-producing country, it might be a little less volatile than oil, given the nature of the contracts and the like. But that's something that's quite important. And I think it's a reason why it's important to look at sovereign funds as part of a national balance sheet rather than just as individual actors on their own.
So you mentioned that some of the funds were reinvesting their money in oil and gas, but we know also that some of them are looking into greener investments. And do they have a dual approach? And is it an indicator of future investment trends?
Sure. Historically, many sovereign funds from oil producing countries had energy sector as a no-go, right? They said the whole goal was to invest outside of the energy sector because the country was already so exposed to the energy sector. So the view was invest in anything but energy. That's kind of shifted over time because many, both sovereign funds, but nations, they say, well, you know what, we have an expertise in the energy sector writ large. Why shouldn't we invest in other jurisdictions in energy? And so if you look at the asset allocation of countries like Norway, if you look at some of the investments of the Kuwait Investment Authority, you look at entities like Mubadala and Abu Dhabi, they have significant energy investments abroad. A trend that has happened, as you highlight, is that big institutional investors like the Norwegian Pension Fund have started to blacklist some fossil fuel investment. That I would say is part and parcel of a trend across in some institutional investors, public pension funds, that are looking around and trying to future-proof their portfolio. And they're also driven by research that says that lower carbon portfolios can outperform higher carbon portfolios. Norway recently made an asset allocation decision to significantly reduce oil and gas exposures, but particularly smaller companies. The big diversified oil majors can still be invested in. So it's a little bit of maybe a decision that makes nobody happy.
Right. I mean, for me, it's kind of interesting and maybe presents kind of a moral dilemma for the country because Norway is positioning itself as a stable and reliable exporter, especially a gas supplier also. And for example, in 2018, they set a new record in gas exports. So a lot of their revenue are derived from gas. At the same time, they are looking into decarbonizing their portfolio and at home also their energy mix. And so it's kind of I think like the moral positioning is a bit ambiguous also.
I think you're right, and I think there is almost a luxury of some of the moral positioning for a rich developed producer like Norway versus some of the producers that are at a much lower rank of economic development. In some ways, these asset allocation decisions get into some of the debate over what some have called carbon imperialism. But I do think the many sovereign funds have at least explicitly the goal of investing for the long term. Whether that long term is 5 years, 10 or 20 years, we are in an environment where the cost of carbon is, where we're going to have increasing visibility on the price of carbon. And so I think they're looking into that area. That said, investing in renewable green technology can have other benefits for oil and gas producers. For some of the countries in the Gulf, they have been interested in investing in some renewable technology for the goal of reducing how much hydrocarbons are consumed at home. So in a sense, greening the power grid, that might be a little optimistic, can reduce the amount of oil that's burned for power generation in Saudi Arabia.
Right.
Some
And
of these projects,
I think that's
yeah.
something that Saudi Arabia put in writing in their roadmap
Mm.
2050. And I think it's important to point to the fact that it's not divestment from oil and gas for those funds. It's more like changing the shares or adjusting the exposure of their portfolio more than divestment.
No, I think that's very true, and I think some of it is just looking around and seeing what the risk return is looking like across different industries. And in this context, ultimately, I think they're different. We have a dynamic, and one important thing to watch, I would say, is the way in which sovereign funds and other long-term capital can be part of improving our access to information on things like environmental data, ESG data. And that's where I think things like the One Planet Initiative governance framework is something important to watch. This was a platform put together by several sovereign funds, especially in the Middle East and Norway, and it aims to, there are different views on how much of it was designed for good publicity, but they are looking at and saying, you know what, these are important things to take into account for our long-term returns. So it's not necessarily knee-jerk selling decision, but more a question mark of what is going to lead to long-term sustainable returns. And these funds, they're learning from and co-investing with some of the pension funds in countries like Canada and places like Australia and entities like the Sovereign Wealth is the International Forum for Sovereign Wealth Funds is a place for learning and co-investing. It's not always a linear process, but this is definitely an area where these sort of pools of capital are coming together and trying to assess governance.
And I think you research also like what we see between funds, like partnerships between funds. I'm thinking about Russia and Saudi Arabia. Have we seen joint investments and why?
Yeah, we have. Russia kind of epitomizes a trend we've seen elsewhere, which is a country co-invest, basically creating an entity to co-invest with inward investors. So the Russia Direct Investment Fund, created almost a decade ago, its goal was to put some government capital in to encourage foreigners to come to Russia. So that the government would have some skin in the game in local projects. Now, in the advent of economic sanctions and reduction in investment from the US and Europe, this has been an entity where a number of Middle Eastern countries and also China and some other Asian countries have been the major players here. But the co-investment trend is broader. India, a country that obviously is a big energy importer, is another country that has created an institution to co-invest with global capital in this way. Now, back to Saudi Arabia and Russia, that's, I think, quite important more broadly to the energy industry, because, of course, that relationship is the backbone of the OPEC Plus agreement. And in managing sort of short-term oil supply, so I think it's important to note that partnership and joined up interests aren't just about trying to manage energy supply and balance energy supply to a price that both countries can live with, but it also is extended to Saudi investment in significant parts of the energy supply chain in Russia. It's too early to say exactly how effective this is going to be, but it is clear that we've seen billions of dollars of investment, not only from Aramco, but also from some of the other GCC entities in Russia. And I think it's an important trend to watch.
Yeah, I'm monitoring it closely because Saudi Arabia has shown interest in the Arctic 2 LNG project in Russia with Novatek. It remains to be seen if they are going to finalize any agreement, but definitely interesting to watch for the geopolitical dimension of it too.
Yeah, and I imagine also if it comes close to fruition, what sort of price points as well.
Yeah. So I'm thinking about three developed economies with oil and gas wealth: the US, Australia, Canada. Do they have wealth a sovereign fund? Not really, right?
Yeah, really good question. So in Canada and the U.S., one of the things that happens is that resources are often managed at the state level, the state or provincial level, and so you actually have. So the U.S. doesn't have a fund, but Alaska has a
Right.
fund.
Right.
And Alaska's fund is an interesting one because it actually provides a dividend to local population that is funded by the returns on its capital. And it can become very political in years where the dividend is smaller. But that's another story. In Canada, again, Alberta has a fund. But there was also a choice made in Alberta to pump. There are a couple reasons why their assets under management are not very large. One was they decided in the oil boom to pump more money into education spending today, or 10 years ago. And so expanded university places, medical training, and the like, which is a growth of human capital and development. Number two, of course, the Canadian oil sands patch has pretty high production costs. So some of the countries that have the largest accumulated savings are those that both have low government spending needs, but also have relatively low production costs. So those have been important factors, and all of that, I think, sort of very much plays into decisions at a national level about how these should be deployed. And all of the developed countries we've talked about are places where elected officials can have some say and sway over what type of institutions are created. That's a little bit different in many of the countries in the Gulf, for example, where the accountability structures are very different, and at times, at times it's very difficult for individuals to get access to, to make their points heard about what the funding for future generations should look like. Yeah. All of these, and that's a challenge going forward.
Yeah. It seems that in those countries, in the three countries, part of the population is very aware of the benefits of oil and gas for their economy, and all the derived services that they can get from there. But also, it's an educated population, very sensitive to environment. I have in mind recently this picture of a truck convoy in Canada with the message, we love oil and gas, we love oil and gas, Canadian oil and gas. And I think they crossed some parts of the country. That's a part of the population which is proud of oil and gas, and those are truck drivers. They work in the oil and gas industry and have a job. And as you mentioned, Alberta put some money for education. I think they are aware of what that can bring them, but at the same time, there is a lot of environmental opposition. What do you think in the future, how this kind of torn feeling will be resolved or not resolved?
I think it's going to be, 2019 is an important year for that, especially, in the specific case of Canada. We've just had about a week and a half ago, the Alberta elections, with a very different kind of, with a very politicized campaign. And the federal elections will come up in towards the end of this year. And I think it will cast in sharp contrast some of the different provincial interests. And that's where I think, and there's been a lot of different views, not only environmental, but questions about who benefits from some of the new pipelines that are being proposed. In Canada, as I mentioned, resources tend to be provincial jurisdiction. Infrastructure that crosses borders is federal. And there's a number of very complex court cases on pending both oil but also natural gas pipelines that at least in part hang in the balance. Another thing I think that is, though, different and changes the dynamics of stakeholders is that, of course, in a number of these developed countries we're talking about, there might be government royalties that feed into the budget, but that a significant share of profits go to private companies. And that, of course, is a different story than in countries with national oil companies. So that's always going to shape a little bit what are the tools the government has to either redistribute wealth or provide services. Okay. So, for example, in this case, one can still tax the companies that produce, but it adds to it has a different sort of political complexity.
Mm-hmm. Well, Rachel, let's move to our personal and professional trajectories segment.
Sure.
So you studied philosophy and international relations. Tell us more a little bit about your trajectory. How did you become an expert in macroeconomic and all what we discussed, trade and investment? I studied also actually a little bit of philosophy. It's mandatory actually in France when you're in high school, which is really good, I think. Great. And it was one of my favorite subjects, especially political philosophy, before entering Sciences Po and at Sciences Po. And I think it stays with you forever. And trying to apply sometimes what the Greek democracy in Athens teach you about modern times. But what drove you to pick philosophy, and how did you come from philosophy to more macroeconomic stuff?
Yeah, so I always found history and political dynamics, including philosophy, of interest, partly because they can help explain policy decisions today. My first degree was actually in medieval European and Arab history of sorts, on issues like the religious justification of conflict, which I joke prepared me well for working on the Middle East of the 20th and 21st centuries. But, I found some of the most interesting political international relations questions I worked on to be ones that touched on economic issues. So the distribution of resources, what that means to political structure. So I found myself interested in that intersection between politics and economics. And then I needed to, become an expert in the economic tools so that I could make a strong argument. So I think it's important as an economist to understand the range of policy trajectory, but it's important as a political science or policy expert to know to be kind of held a bit accountable by the right sort of economic models. So there's a lot of keeping everyone accountable or trying to.
Yeah. And so you, from the beginning, you wanted to specialize in what you became an expert on. You knew from the beginning that that was the specialization you wanted.
No, I didn't. I went from topics that interested me. What I found was interesting was that sort of the politics of how countries use different currencies, how these institutions work. But there was a lot of, I think, luck along the way. Living in Egypt right after graduate school and seeing the country go through one of many currency crises was quite formative. I was also exposed to a number of the policies of the developing Gulf states while there. And then there was a certain amount of luck and sort of projects that I worked on for parts of the Canadian government on the development side. And then I found myself working for Nouriel Roubini in his research firm in New York for many years. And that introduced me to looking at a country's balance sheet holistically, and did a lot of work very early on sovereign wealth funds, on the energy, on energy producers. And I found this question of how do countries balance those resources and demands fascinating. And so that interplay between significant government role in an economy, how do the governments use that? How do the people hold them accountable? So a lot of the work I do, I would say, looks at that. And then as anyone would do, you work on what interests you, and then you go a little bit where that intersection comes with what clients are interested in.
Right.
Um,
Yeah, very interesting. And now, so you've developed a portfolio approach where you have different activities. It seems very trendy. We talk about a freelance economy, portfolio approach. Can you tell us a little bit about what made you jump to this more innovative way of working?
Yeah, you're right. I think it has become a bit trendy. So the way I look at the sort of work I do is, and the affiliations I've collected, which was to say that I want to be connected into financial markets across a variety of ways. And so to understand what market signals are saying, it's very important to understand policy debates. And so my work at the think tank allows me to be at the cutting edge there. And it's also important to have a foothold in academia to understand how those who are writing the literature, so to speak, are assessing these issues. So I always valued that at Rubini Global Economics, we had clients that spread on the policy area, on the across markets and academics. And so what I do now through my portfolio approach is write things that are relevant to each of those areas, but also try to continue to make sure that a policymaker, whether it's a staffer in Congress or whether it's someone at the US or a global treasury, is aware of how a market actor might view the policy that they're considering, and vice versa. So connecting those dots and helping them understand across those areas is some of the work I enjoy the most, because it's sort of fact and evidence based, but it is still understanding how the processes work. And in this day and age, with so many connectivity tools and new ways to access clients, I think there is more opportunity to connect those dots. Mm-hmm. It's still difficult, but I think it's been a great way to come up with more comprehensive analysis.
And in terms of logistic, how do you manage your time between those different activities? And financially speaking, did you find it more risky to have this approach, or at the end of the day, you made it work?
Great question. It definitely is more financially risky rather than necessarily having a pay, sort of a biweekly or monthly paycheck.
Predictable revenue. Yeah.
Predictable revenue. I mean, I've made it work. I think the fact that I guess I did what I maybe would encourage a country to do, which was to sort of build up some liquid, some liquid cash and other things like that, made it possible. We do live in a world where many suppliers and buyers like to delay payment. It does mean picking clients carefully. But I do think that started to build up my business. I found it very important to have a few anchor clients who would be subscribing to a steady flow of research. So that then gave me the space to do other project-based work. I've also been, I think, incredibly blessed by a network of people who are also doing innovative things, often in small companies. And so partnering with some of these individuals who might be experts in the credit space or experts in a given sector, and jointly bidding for projects, leveraging in a very constructive, collaborative way relationships that I built over the last decade or two has been quite important. And that's something that I'm grateful for and want to make sure I pay forward. So it's been a lot of fun, a lot of hard work, but I've really valued all the people I've met and re-met who are doing really fascinating things to change the shape of the sector and economic and political analysis more generally.
Yeah, well, I totally agree with you.
Like you.
Yeah, and I recognize myself a little bit. So you created your own advisory shop. And as a woman, how easy or difficult was it for you to establish your credibility in the consulting world, which is predominantly led by men?
Well, I feel like, as with many things, when sometimes it's only as good as one's last call or last piece of work. So I think it's something that's always an ongoing process, establishing and maintaining credibility, especially for someone that has a general and diverse area of expertise. I'm not someone who just has a single country area of expertise.
Right.
I put given countries in a global context. So I think there's a bit of a constant area of building, rebuilding, and establishing expertise. I do think that the time I spent with a larger but still kind of nimble and public-facing firm helped a lot. And that's really also where having the different affiliations, maintaining and contributing as a media commentator, I think has also helped there. And I've also been, delighted to help support a number of interesting, innovative startups and to, communities of experts like Global Wonks, and to continue to have that flow of information. And I've also benefited from and hopefully pay forward the fact, sort of support from other entrepreneurs, both men and women, but especially women who themselves who are creating and establishing that credibility.
Yeah.
And I think that network, particularly in a world that to some extent has been dominated by boys' clubs, the more that we can build nets and point people to strong candidates and individuals, whether it's for speaking engagements, for work and the like, is really important.
Yeah. Well, I think we're both changing also the way consultancy advisory used to be perceived. You don't need to have 40 years of experience, gray hair, a beard, and being a tall man to be able to brief clients and know what you're talking about.
Definitely. And I think the work that you're doing is really quite inspiring in that, in that space. So and I've learned a lot from, as I said, quite a wide, sort of wide network of, and it's really good to know who's doing what interesting thing. Because in this environment where more and more people, some people are entering this world of more, sort of flexible work and what might have been called freelance by choice. Some are entering it not necessarily by choice. And so in a world where benefits and institutions may not catch up with the kind of innovative work people are doing, I think it's really important to sort of share that information and build the institutions.
Yeah.
And it's definitely not linear. Hopefully we do 2 steps forward, 1 step back when we're doing it, and rather than staying still.
Yeah. Well, congratulations. And I really admire your work, Rachel. So keep going. And
thanks. The feeling is mutual.
Yeah. Great. Well, thank you for being with us.
Thanks a lot.
That concludes our Energy Vista podcast, which was recorded on April 26, 2019. Our theme music is provided by Music Screen, licensed under Creative Commons. This is Leslie Palti-Guzman saying good day and good luck.